Hi everyone, my name is Brady Mullen with JuvoRep, and today we're going to be talking about some accounting tips for realtors. I want to introduce myself by mentioning a quote from this crazy guy you've probably seen before. He says, "Make everything as simple as possible, but not simpler." And our firm has created 3 presentations about best practices from an accounting perspective for realtors, and we did it in a way where we tried to simplify it so that it was as digestible as possible without making it so too simple that it's not usable. So we're going to be talking about some best practices for running a real estate practice from an accounting perspective and give you useful tips and information that you can use for doing that. You may be wondering the name JuvoRep, where that comes from. Juvo is Latin for to assist or to serve, and Rep is an acronym for real estate professionals. We are an accounting and bookkeeping firm that specifically helps real estate professionals with those items. And before we get into the meat and potatoes, I want to let you in on a little bit of an accounting secret. While good bookkeeping and accounting is going to save you money in taxes, that's not the main purpose. The main purpose and the main benefit is that it keeps your business organized. You can confidently take all the deductions that you're eligible for. You keep a running estimate of your tax liability, so that's never a surprise or never a cloud hanging over you. And when tax season comes and it's time to file taxes, it's a very simple process if your books are in order. Those things should not be a burden and should not be holding you back from running the best business that you can. So let's get into the meat and potatoes of this stuff right away. The 3 presentations are the foundation, the brick and mortar, and the finishing touches. We're going to be going over the foundational items today, which are creating an LLC, your options in filing taxes once you've done that, and which one has what kind of a benefit and when to use them. And then we'll go over some important deductions that realtors should know about. The next 2 presentations, I'm not going to read these bullets. You can pause the video if you want to read through them just to see what's coming. But the brick and mortar presentation gets a little bit more in depth on some of the tax strategies. And then phase 3, the final touch, gets even more in depth on some things that are available when your business is up and running and quite profitable, some things that you can use to save taxes. One of the interesting things that we always get a lot of interest in is how to use retirement accounts like 401ks and cash balance plans, defined benefit plans to buy alternative assets like real estate. And we can show you how to do that. We'll be talking about that in phase 2 and phase 3 presentations. So let's get right into the foundation. Creating an LLC. Every realtor should do this the very first day you start buying and selling real estate for your clients. The first reason for this is simply for some legal protection. It's not ironclad. A lot of aggressive attorneys will tell you that they can pierce that veil, but an LLC separates your business from your personal life, and while it's not impenetrable, it's like closing and locking your doors in your house. If someone really wants to get into your house, they could probably find a way in, but that doesn't mean that we leave our doors open and unlocked and show ourselves out there as an easy target. Creating an LLC is a great way to do business properly and to have some protection between your business activity and your personal life to make sure that those things are separate. There's a little bit of additional reporting that goes along with that, but it's very, very minimal, and it's inexpensive to do, it's easy to set up, and it's just good business right from the get-go. From a tax perspective, once you have a business, an LLC, you have two ways in which you can file taxes. First is a sole proprietor, and essentially a sole proprietor there's nothing magical about it. All the income that you take from your business is considered income, and you pay FICA taxes, which is a combination of Social Security and Medicare tax, and you pay income tax on that money, just like income from an employer. The next option is you file taxes as an SCorp, and when you do that, the IRS looks at you as having 2 roles in the business. One, you're an employee, and you're also an owner. So as an employee, you receive what's called a reasonable salary, and that's IRS language right there. It's not clear, cut, and dry, so you need to talk to an accountant or your accountant or figure out what's reasonable, do some studying, figure out what's reasonable in your business and how you run your activities. And then you also take distributions from the business as the owner. So you're taking money out of the business from two different roles in the business. The magic in that is that as an employee, you pay FICA taxes and you pay income taxes on that money, just like a sole prop. That's short for sole proprietor. Sometimes we get used to using our own language. But when you're an SCorp and you take a distribution, that distribution is not subject to FICA taxes, which is 15.3%, the combination of Social Security and Medicare tax. That ends at certain levels of income. I'm not going to go into those details because it doesn't really change the heart of the message of what I'm saying, and that is distributions that you take are not subject to FICA taxes, whereas the income is subject to FICA taxes and income taxes. So you can save 15.3% on the money that you give yourself that is not a part of the reasonable salary. If that sounds like mumbo jumbo, maybe it's easier to look at an example real quick. So in this example, we've got a modest income of $50,000, and this particular individual decided to take $25,000, as a reasonable income, and $25,000 is designated as a distribution from the company. So she or he is not paying FICA taxes on that distribution, which is $25,000, and that saves this realtor $4,000 every year. Now I realize when I look at this slide, of the numbers that are up there, the $4,000 is the smallest number. But remember that $4,000 is 40 $100 bills. If somebody handed me 40 $100 bills, that would be a pretty good day for me. I would like putting that in my pocket. It's meaningful money, and it's a very simple thing to do just by filing your taxes a little bit more intelligently. You got to follow IRS guidelines to do that. I always forget that's why I put this in the slide, so I wouldn't forget to say that. You have to make sure that you articulate and keep track of things properly. But it's not really a big deal, and there's some money in it by saving those taxes. So here's a couple of different graphs that show you how much FICA tax you pay at different levels of income, so you can get an idea of how much savings there is at stake at these different levels of income. I know there's a lot of you out there earning a lot more than that. There's a lot of you out there doing a couple of transactions a year just to stay on top of things and don't use it much as a full-time career. But in short, the higher you go in income, the more you save by filing as an S-Corp, and you don't have to be earning that much to make that worthwhile. I mean, you can see in this case at $30,000, it saves $2,300 to file as an S-Corp. I mean, that's not a lot of income, and it's already profitable to do so. Okay, this is always a popular section. Talk about some deductions that everybody should know about and be taking. Vehicle, real simple. You've got two ways you can categorize that. You can either take mileage, or you can deduct actual expenses on your vehicle that you use for business purposes. This is a big one for realtors because I know that most of you drive quite a bit to do your jobs. Home office or desk fees. This is an interesting one. A lot of people don't take a home office deduction because they're not sure how to track it. They're not sure how to follow the code. It's black and white information in the IRS code. It's not a difficult thing to take, and you should be taking it. And if you can just simply document it properly, there is nothing wrong with it. It's not a red flag. The IRS allows you to do that because they know that doing business out of a home office is a legitimate way to do business. Cell phone and internet costs. You use those for business, you can deduct that expense. Marketing and advertising. Hopefully you guys are spending some money on those things. Make sure you deduct those costs. I'm sure most of you are. Meals and entertainment. Those two words were constantly lumped together in deductions, but you should know that entertainment is no longer deductible. That's a part of the new tax changes that happened this year. And meals fall under two categories. If I'm eating with my mortgage broker that I like and my title company rep or whatever, that expense is half deductible. And a better way to say that is half of that expense is deductible. But if I'm feeding a group of people that I want to educate or do a seminar about real estate and I want some exposure there, that's considered a marketing expense, and that meal is fully deductible. So don't correlate whether food's involved, whether it's half deductible or not. It's what you're doing at that meal, whether that makes it partly deductible or fully deductible. Professional fees and subscriptions, like accounting, bookkeeping fees, deductible. We get that one a lot. E&O insurance, obviously a business expense. Make sure you're deducting that. Licenses and memberships. Your realtor fee, the association fee, is mostly deductible. There's a portion of it that isn't because that's used to lobby, and the U.S. government views that as a conflict. They don't allow you to deduct that part of it. But that fee is almost all deductible. You should know how much isn't, so you make sure you do that properly. But make sure you're taking that deduction. Professional development and travel, this is an interesting one. If your professional development is deductible, education is not deductible. So you need to make sure that if it's not clear which one it is, or if it can legitimately be called professional development, call it professional development because that's a deductible expense along with everything associated with making that happen. So if you have to travel to go do that, that travel expense is deductible because professional development is deductible. So think about those things when you think about improving yourself in your career. Professional development is deductible, education is not. Health insurance, deductible. If you do that properly, you can deduct that through your business. Retirement plans, we're going to go into more detail in the next presentations, how to use those to not only buy assets that you want to invest in anyways. You can buy homes in 401k plans, business. You can't live there. We'll talk about those things in the next time. I don't want to get too deep into that. But you can be really creative with retirement plans and have the dollars that you're using to invest in your future be done in a very, very tax-efficient way. So we'll talk about those details. And then make sure you're documenting these things properly to make sure you're following IRS guidelines to your books properly. So in summary, I come across realtors all the time that are doing it right. They're doing it great. Their books are impeccable. It looks awesome. And I come across realtors all the time that have a sack or a box full of receipts. They're nervous about what their tax liability is going to be, and they're not sure they've saved enough to pay that. I come across realtors where tax time is very stressful for them, and it doesn't have to be that way. And like I said earlier in the presentation, the biggest benefit that you can get from proper bookkeeping and accounting, yes, you're going to save money on taxes, but the biggest benefit is that it organizes your business so that all those things can be tidy, put inside of a box, relieve that stress off your shoulders, and know that you can go into business with a better mindset. It has a profound impact on your personal and business, your professional and personal lives. If setting all this stuff up sounds important and keeping track of it sounds important but a little bit daunting, check us out on the web. It's probably a lot less expensive than you think to have all that stuff taken care of for you. And it may not be as hard as you think it is. Some people are just naturally good at organizing those things. If that's you, great. If not, it's a pretty inexpensive thing to have covered for you so that you can go out and spend your time doing the most productive and most rewarding thing that you can be doing, whether that's professional or personal. So I hope the information that we shared with you today was useful. Hopefully it's something you can use in your practice. If you have questions, our information's right up here. And thank you for doing your part in making Colorado one of the best places on earth.